We're on CNBC a lot. We're talking about like crypto and NFTs and SPACs, a lot of different emerging trends in the market. But you say, and we just hit on it a second ago, something's going to return to the markets that we haven't seen since '09, and this throwback is actually good. You're going to have to explain that thesis.
Well, Frank, I think the thing that we haven't seen for 10 or 12 years really is fear in the marketplace, fear in a bear market, fear that I own stocks ever in my life at all and wish that I'd never heard of this and wish that I didn't own any right now. That hasn't happened for a long time. The 2020 March dip was really too brief, and we now have a generation of investors that have never really had that scary moment in a real bear market. So I always feel that a little bit of concern and a little bit of worry is healthy. I don't like the fear stage of the market. Nobody likes it. But that could happen again. It will happen again at some point. The fear right now and the worry that's being brought on by Omicron, inflation, and a Fed reaction, I think are healthy. It makes people examine balance sheets and understand what they own. It keeps a lot of the fluff out of the bubble area of markets. It prevents those bigger and steeper declines you hope and keeps you honest while you're doing the hard work of investing.
So, Michael, I don't know what you listen to. You ever listen to Lil Wayne? You know who that is?
You know, I do know Lil Wayne. My kids love Lil Wayne, and I can't stand Lil Wayne. I got to tell you, I can't stand Lil Wayne. Drives me out of but my son and daughter are big Lil Wayne fans. They even went to a Lil Wayne concert years ago. Yep.
I'm going to bring this back to the markets real quick. So Lil Wayne has a group called Young Money. I like to call you Mr. Old Money. A lot of people think the old money is the smart money, and we're seeing a lot of that old money retreat to the bond market. Right now, the U.S. 10-year at 1.443. What does that signal to you that a lot of people are going back to the bond market?
Well, I think there are a couple of things. One, I think it is a little bit of a fear trade. It's a flight to safety trade. It always has been in that 140 range. The Fed said they're raising rates. The 10-year hasn't budged. But relative to other interest rates around the world, we're still high. The 10-year Bund has a negative yield right now. You give your money to the government for 10 years in Germany, they're going to give you back less, guaranteed. So relatively, we still look okay. But it doesn't look like there's robust growth. It doesn't look like there's an enormous demand here for growth.
All right, yesterday we saw a bit of a sell-off. I know you have some stocks that you say you should never sell, even with this Omicron uncertainty, even with some of the inflation that we're seeing, the Fed changing its monetary policy. Can you give us a stock that you would recommend buying right now and that you would ride through all this uncertainty, at least through the end of the year?
Well, I don't know how eager I'd be to jump into them right this second, but part of my core portfolio, like Buffett's core portfolio of Coca-Cola and others that he hopes not to sell, I own Johnson & Johnson, I own Pepsi-Cola, I own Microsoft. I may trim them if they get to be too expensive at some point. I hope to leave those stocks to my grandchildren. I hope that they're still a part of my estate. Those are solid companies that you ride through markets with. So we have a short-term thing going on here with Omicron. This will pass. Longer term, we've got an expanding economy that's still healthy. These bull markets don't die of old age, so we're going to look at the Fed, what they're going to do, and will the Fed, as the economy continues to expand, put enough pressure on inflation to keep that expansion intact? That's the million-dollar question. When you go through these periods, you still remain invested, and you do it with the healthiest companies you can find.